a few questions for you. One is like, what's the ideal LP for you? Like, how do you pick LPs to the extent that, you're oversubscribed, you're trying to choose, or you meet people and you're like, hey, this person's not a fit, or hey, that person is a fit. Like, what are you looking for?
I like, there seems to be two groups of people who enjoy working with us and that we enjoy working with. There are some who are set it and forget it. Hey, we understand venture. We want to place a bet. We understand, you're going to have some funds, fund 1 and 2 might overperform, fund 3 might underperform, fund 4 might be average, fund 5 might break out. We understand the dynamics and the randomness of what you do. So we're going to be in it for the long haul. And we want like this level of communication, which is typically yearly audits, and then we have another group, which I really enjoy working with, which is the new retail investors who, hey, I've made some seed investments. It's my first venture fund or my second venture fund. I'm looking to, put $250K to $5 million into venture funds. And, I want to learn. And yeah, I like looking at the Google sheet that you share with your major LPs, over $1 million LPs that have all the, companies in it in real time. And I kind of like the rush. I like the sweat, as we would say in gambling, of like seeing the companies you're investing in and being part of the community, right? So people who really, they seem to fall into those two buckets. The ones we don't like working with are maybe ones who are a little skittish. Maybe they're, overextending themselves. They don't understand the asset category. I've had people in our syndicate who will get really upset at a founder failing, and they'll write like an email, I didn't get updates, and why didn't I get updates? And now you're failing and you didn't work hard enough. And I'm like, hey, reputation wise, like you came into this knowing that 80-90% of seed stage companies go to zero. And, you invested in 5 and 3 or 4 of them went to zero. Isn't that what's supposed to happen here? So, let's be gracious and magnanimous in defeat and victory, right? You got to be humble in victory. Hey, people ask me about my investments. I'm like, yeah, I got lucky a couple times. There's a lot of hard work involved. And I also, some of it's luck, and be in the right place at the right time. Sliding doors, whatever. And the more you focus on your process and the better you get at your craft, the more I think you, quote unquote, increase your luck. And so, it's some people are skittish, and I always encourage them to not go into a venture. They should put their money into a mutual fund. They should put them into Vanguard funds, and not be in this asset class. If you want liquidity, if you can't take losses, if you can't take, founders who are, like I said earlier, iconoclastic, effervescent would be like a kind way. Some of them are hard to get along with, and the hard to get along with ones sometimes are the ones who are the most successful. Man, you should not be in this asset class. It's just going to be way too.
That all resonates. And I'm curious, like many GPs I talk to say that they don't know where they stand with their LPs. They don't get much feedback from them.
No, that's been hard for me. Yeah.
Yeah. I'm curious, like if you could ask your LPs questions, like what would you ask? What do you want to know that you don't know?
Oh, I mean, the one thing is like, just tell me why you're passing on the fund, in all honesty. And I think a lot of LPs are like VCs, we're passing on the majority of what we see in order to, but there's no upside to being honest on why you passed. And so, if you pass because you thought, your fee structure or your carry structure is, I think a little too rich. I would love to hear that piece of feedback. There was a fund of funds who's like, I just can't, do 25% carry or 30% hurdle because I'm charging 10%. That's 35 and 40. It's just way too much. I can't get it past my. I would love to know that. And I would love for that person to say, I would put 10 million in, I put 5 million in if the fee structure was this. But, JCal, I can't do your fee structure or whatever. I'm like, okay, fine. Let's have that discussion. Maybe at least like to know. Right. And so there's no feedback loop. I'm trying to give people permission to tell me candidly. I don't know if they will, but
yeah, it's hard to get them to. I mean, it's funny. It's an emphasis of mine, like to be clear. And I really do try to be real with people and tell them like, hey, like, here's what I love. Like, here's why I'm not going to get there. And like, if you're open to it, like, this is a fund I'd love to see the next fund. Like, I'd love to stay close. I'd love to try to help. And sometimes if I don't think a future fund would be a failure, I don't say that, but it often does result in like staying close to folks because they feel like I was honest. I mean, I was honest.
I had one LP because I insisted that she tell me, and she was like, we just haven't seen somebody have 200 portfolio companies in a fund and then also be concentrated. I'm like, great. Let me explain to you how we're doing it. I explained it all to her and she was like, great. Still a no from us. But I said, I just want to make sure you're not out there, when you're talking to other LPs or whatever, saying that this is a bad strategy, because I am convinced it's a great strategy. Here's why I think you're wrong. I told her why I think she was wrong. You might be right with most folks, but here's why you're wrong in terms of our fund. And here's what I'll show you in the coming years. And she's like, great. If you do show us that, then we would love to be LPs because, just because we haven't seen it before and we have an investment committee that requires us to, hit these notes doesn't mean it's not going to work. And so I just insisted on getting on the phone and just making sure, hey, if you disagree with our portfolio, and, listen, I have a unique idea. And my idea is different than what a lot of people have seen. I believe you can put 200 or 300 logos into a fund and then reserve 50% of the dollars for the top 5 names. And the only reason I know I can do that is because my portfolio before had our first fund had 109 names and in 4 unicorns. Right. And then we looked at it and I asked myself, did I know Robinhood, Calm, Superhuman, and Density would become unicorns? And I knew 3 of them definitively would have been unicorns. With enough time to put the investments in. And if we had, instead of that being a 5X fund, which is where it is on paper right now, it would have been a 15 or 25X fund if we had just made those second bets. And so I'm like, you know what? That was my mistake, not making the second bet on Robinhood, the second bet on Calm, Density, and Superhuman. And we had the opportunity to in every single case, but we didn't reserve the dry powder. And that, to this day, makes me insane. Like, this makes me mental to only have that be a 5X fund. Because I knew it could have been 15. Would have been easy to put another 250K into those 4 names. And if you had put an extra 250 or 500K into those names, boom, legendary fund.
Yeah. My last question for you is, VC is a really long duration asset class. Mm-hmm. And I think there are plausible arguments to believe that liquidity could come sooner for vintages now than maybe vintages 10 years ago. And maybe it won't be such a long wait for LPs and funds these days as it was for LPs and
because the secondary market, how vibrant the secondary is.
Companies grow faster for cheaper. They may raise fewer rounds.
Yep.
I agree with all opportunities. Curious what you think. Like, do you think 10 years from now we'll say actually it used to be a much longer duration asset class than it is today?
I think secondary. I think if the GPs choose to build a secondary discipline inside their organizations, you could be right. And I've decided to do that. So after we finish, we're going to wrap up our fund May 1st has been the date. And so when we wrap up our fund, my plan has always been to, when we get, to a certain number of investments in Fund 4, to start that process of building the secondary group, deputizing a person. Your job is to look at all of just talk to the secondary markets every day. And there's so many of them now, and just make friends with them, get their phone numbers and say, hey, you know our names, here's the price. When this hits $10 a share, we might be inclined to sell 100,000 shares and take $1 million off the table if you find somebody. And they might say, oh, can we go find somebody for you? I'm like, well, the highest you've gotten is $7 a share. So probably not. But when you consummate at $9, that's when we would probably want to engage. So I was reactive to people calling us because, people would get the cap tables of these companies and start calling the seed investors, pre-seed investors. And so now I want to think about actively doing that. Or, and this is a little controversial, just talking to the other funds that do the Series B or C and saying, hey, you did the Series B, the round's closed. We're both on the board of this company. We're looking to pair our investment. If at any point, we don't want to sell our holding, but we want to get our LPs liquidity. If you wanted to buy 20% of our position for 200, we have 1 million shares. You want 200,000 shares. We're kind of at our target now, and we wouldn't mind paring back our ownership and just see what they say. Now that a lot of VCs have not wanted to do that because founders might interpret it as a vote of no confidence. but I think the market's maturing and there's a way to do it, without having it reflect badly on the company. Like I'll talk about secondary sales now, way in the review mirror, but I wouldn't talk about them in real time, right?
Yeah, I mean, two things that come to mind there. One is, I think increasingly, like coming out of what happened in 2020, 2021, and partially 2022, like I think the pressure's on. I think people feel pressure to get liquidity, but I also wonder, like, whether we're overstating the potential relationship issues with founders when we talk about pre-seed and seed stage investors selling secondaries in growth stage companies. I actually think those issues can be managed, and if the investors are close to the founders,
it's a process. I mean, I've had founders explicitly tell me, like, we want you to waive your pari passu, like we want you to not sell in secondary, so we as founders can sell more. Now that's when you've got a real situation where I've had to say to founders, I understand and appreciate that you're asking. I want you to understand and appreciate that we've told our LPs that we would pair 20% of our position. And in a case where I had to do that, actually, I had to do that in one case. They're like, totally understand. I was like,
I also hear of stories. Oh, go ahead.
No, and I said, oh, okay. How did that go with the other investors? Oh, 4 out of 5 other investors said they would waive and they wouldn't sell. You're the only one who's selling. And I'm like,
yeah,
okay.
It's interesting. And I've heard of founders who say, who try to block their early investors from selling on the secondary market because they just think their company's worth more than that investor has agreed to sell it for. And I'm hearing that coming out of the last few years of very high valuations. And that is, I wonder if we'll see more of that in the near future.
If you were an investor in Figma and you could have gotten out at 10 or 15 billion and they had that sell for 20 billion, if you had sold at 15 on the way up, in the Adobe Figma deal, then at 20 billion cracks, and now who knows when you're going to get liquidity at 10 or at half that amount. Yeah, you probably would have felt great about selling at 16 or 14 or 15, some percentage of your ownership, right?
Right.
So,
I mean, the hope is that founders let investors do this, but we'll see. It'll be case by case.